I am making a video and I am calling out Gary Gensler and the SEC for this abysmal sort of report that came out talking about the events that transcribed in January between AMC, GameStop, and other of the so-called meme stocks being taken away of the buy button. You had a bunch of different crazy stuff happen. Guys, if this is your first time watching me, if you're not familiar with the events that had taken place, back in January, you had a setup for some nasty squeezes. GameStop ran from $5 all the way up to almost $500. AMC went from $2 to $25. Cost, Bed Bath & Beyond, Nokia, BlackBerry, many other names were having absolutely monstrous days, smoking shorts that were over leveraged to the tits in positions that they should not have been in. And what are you seeing here right now, right? The SEC is coming out and they're talking about the events that had taken place in this report. And I'll tell you what, if I read this whole thing, all 45 pages of this, and I tried to find the best substantial information here to share with you guys, but to give you a brief synopsis, a TLDR, 42 pages of absolute fluff storytelling and 3 pages of bullshit. I mean, I don't know what I was expecting, but I am just appalled at the way that this was put together, and I'm going to show it to you in the most simple way possible. Look at this, right? They got the audacity to write this on page 4 and then close off the report with the following statement. The commission's mission is to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. You know what they say at the end of this, right? Check this out. I can't even believe this shit. However, when share prices change rapidly and brokerage firms suddenly suspend trading, investors may lose money. No, you guys have that wrong. You know that? I want you guys to know that if anybody out there is watching this, investors didn't lose money. They were robbed. That was theft. There's nothing, you don't call it losing money when you have the opportunity taken away from you to even make it in the first place. That's not risk management. That's theft. That's you being taken out of the game. You don't even have a freaking chance. Nobody did. Nobody. If you had stock and all you can do is sell, what happens? Nothing. You can't do shit. I mean, the supply and demand is absolutely toasted at that point. So I want to go over this entire report. I'm going to give you my thoughts on different things that they say throughout this. And we're going to start off here with page 1. We're going to go over a couple different things. I want to talk about payment for order flow as they address that. They also address dark pools and off-exchange trading, ATS trading. I also want to talk about Citadel and Virtue and kind of the system that they've got built up here. And I want to talk about market makers because they are also addressed in this. And then I'll give you their so-called conclusion of this entire situation. So we're gonna start off here with this piece of this document, right? Now check this out. The payment for order flow creates incentives with regard to the end customer whose order flow is being sold. The execution of retail orders by off-exchange market makers raises further questions. So here you have the SEC, they're coming out and they're recognizing the same thing that people have recognized forever, which is that payment for order flow has a conflict of interest, right? For example, a company like Citadel. If Citadel is a firm and they're also a market maker, what does that mean? Well, Citadel, the firm, executes trades on behalf of their clients and for themselves. They're trying to make money. On the other hand, Citadel, who's also a firm, by the way, is a market maker, meaning that they handle transactions for retail and for institutional investors. Now, does that sound like a problem? Well, absolutely it is, because they have extra information coming in to help them make better informed decisions. And yes, they're different entities, right? They're not the same thing, but you cannot convince me for a second after what transcribed in January that they're not in the least bit intertwined and interconnected. And you've got the SEC basically coming out and just saying, look, this is a problem that needs to be considered. That word considered comes up a lot in this document. That's the most substantial piece that came from payment for order flow. I wish I had more, but that's really all they had to say about that, which is going to bring me into the next piece that I want to talk about, which is here on page 35. Now check this out. GME trading in January 2021 shifted the prevailing distribution of GameStop equity executions across venues. Specifically, the proportion of off-exchange activity initially rose as individual investor activity increased. Look at this. An increasing percentage of volume executed on exchange when volatility spikes may indicate that market participants, including wholesalers, are seeking to avoid internalizing customer orders to reduce potential losses when hedging becomes more difficult. Now, what does that mean? As I've discussed, and many others have discussed on YouTube and financial outlets, Twitter, whatever, Reddit, market makers are a huge piece of this problem. And that is a large part of the reason that Citadel gets their fingers pointed at all the freaking time, because they are not only a firm, but also a market maker who engages in payment for order flow with many different brokerages, meaning that they will pay a kickback to brokerage such as Robinhood, freaking Webull, I don't know all the brokerages they've got a shit ton of them, but the point being, they have incentive to get off exchange, and it is being outlined in this exact piece right here, which is going to bring me into the next part that I want to talk about, which is this. Instead, some of the impacted broker dealers maintain that the trading restrictions were a reaction to margin calls and capital charges imposed by the National Security Clearing Corporation, or the NSCC, in response to the extraordinary volatility in GameStop and other stocks. So they're trying to paint this off as if it is a margin / liquidity problem, at the same time as recognizing that there's a drastic increase in overall off-exchange activity. The fact that almost half of all freaking trading taking place on dark pools, ATS exchanges, off-exchange platforms, right, is absolutely absurd. I mean, you're just screwing the opportunity for price discovery. That's not supply and demand. That's not a true bid and ask. That's going to widen the bid and ask spread. That's not going to allow true price discovery to take place, which is absolutely absurd. I mean, they talk about it in here, and you're going to be just mind blown by the end of this document. This is what is insane to me. Now look at this. They talk about the GameStop saga and the run-up that's taking place here, right? Look at this. While a short squeeze did not appear to be the main driver of events, and a gamma squeeze less likely, the episode highlights the role and potential impact of short selling and short covering. What are you talking about? What are you guys, what? I can't believe they're even saying something that absurd, because if you look at this, they recognize the amount of short interest that's in GameStop and was in GameStop, 109% on December 31st, and it dropped significantly when it ran up to $500. What the heck do you want to call that? You tell me there's nothing to do with shorts and gamma squeezes in that situation? Like, maybe I'm just misinterpreting what they're saying here, but look at this. While a short squeeze did not appear to be the main driver of events, and a gamma squeeze less likely, the episode highlights the role and potential impact of short selling and short covering. What do you even say about this? Are they even paying attention? Like, that's what I want to know. They recognize the unusually high amount of short selling that's taking place within GameStop. You can see it highlighted in this little paragraph right here. And they also come out on a different page. This is page 29 where they recognize that. And they come out on a later page, 30, and they say it doesn't appear to be the main driver of events. What else would it be? There was greedy pigs out there that were betting against a company that could have potentially gone bankrupt, but we're trying to bankrupt them. The stock was over 100% shorted, and sure, there's ways you can get to 100% short interest without naked short selling stock. You're gonna have someone that borrowed stock out, and then they borrow that stock out, and then they borrow that stock out. But how is that not a broken system to begin with? How can you borrow the same share a couple times over? That's part of the problem. That's why these guys were getting smoked. And then bailed out in the end. Bailed out in the end. That's ultimately what it comes down to. And you have these guys who are just coming out and saying this. However, when share prices change rapidly and brokerage firms suddenly suspend trading, investors may lose money. You know what that tells me? You know what that tells me? They think that what happened to us is what we should expect. It's absolute crap. Like, I can't even believe that we're reading this in an actual SEC document. When share prices change rapidly and brokerage firms suddenly suspend trading, investors may lose money. That's like saying you should just expect in any situation like this that you could just lose for no absolute reason, right? In volatility halts, here's an example. In a volatility halt, when a stock goes up or down too much, too fast, they cut off buying and selling. Supply and demand, both gone. People have to cool down. Let them do their thing. Think it out. That makes sense, right? I can understand that to some extent. You want to let people cool their heads, but in what situation is it okay to take away just the buy button, to take away just the demand so there's only supply and the only direction it can go is down? Meanwhile, you've got people like Citadel who can buy and sell as they please, right? Other big institutions who can buy and sell as they please, big banks, other big firms. I guarantee it happened. Why are you not investigating that stuff? What are you doing? I mean, out of all 45 pages of this, all they did was explain what short selling is, what a gamma squeeze is. What are you doing? Come on. This was their conclusions. 4 conclusions they had. Forces that may cause a brokerage to restrict trading. A number of clearing brokers, it's a bunch of absolute nonsense, which brings you into this last piece right here. Digital engagement practices and payment for order flow. Consideration be given to whether game-like features and celebratory animations that are likely intended to create positive feedback from trading lead investors to trade more than they would otherwise. They are trying to seriously blame the GameStop and AMC saga as if it's gamification. Come on. You're gonna tell me, a grown-ass man, how to spend my money, other grown-ass adults how to spend their money, as if that's the problem? You don't think people can recognize the risk of getting into a squeeze play, of getting into a stock that's run up that much? Come on. No, that's off the table. The only substantial things that they talked about, and then there's only consideration, right? Only give it consideration, which implies absolutely no action, was trading in dark pools and through wholesalers and short selling and market dynamics. They talk about having a different settlement period instead of T+2, which means 2 days to settle any equity stock, right? That it should be instantaneous or at least faster. And they also recognize that short selling should be more transparent. There are no 13Fs, which is essentially a way to document when in a position is established. There's no 13F for a short position. They're saying we should consider this, right? This is something to take into consideration. There's really no substantial anything that came out of this document. If I'm going to give you any sort of takeaway here, it's that I wouldn't bank on the SEC getting this job done for you. I'd bank on your brothers and sisters, your fellow apes. I would bank on the people out there who really, actually, truly give a shit. Because I'll tell you what, this is the impression I'm giving, SEC. This is the impression I'm given. The commission's mission is to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. That's not the impression you're giving in the least bit when you tell us shit like this. Investors may lose money. Nah, I'm not banking on you until you prove to me something completely different from this garbage of a document. And I know this is a super harsh video, but I'm heated about this. This is absurd to me. I cannot even believe that I just read that. But nonetheless, that's my brief synopsis of this this document that came out. I'm actually going to be having a conversation with Dave Lauer. That video will likely come out tomorrow or Wednesday. If you guys want to check that out, I'm sure we're going to discuss this. We'll have some solid feedback and conversation about it. And the last thing I'm going to do here before I call this video is I'm going to open some mail that came in. I got a P.O. box set up. It's in the description box down below. And I wanted to be able to share with people what got sent to me, because I know for a long time people have been trying to send me stuff and I haven't been able to get all of it. So this package is coming in from Brandon, and there's some pretty cool looking coins. Yeah, this is sick. Look at this. It says MOAS 2021. We like the stonk. And Gorilla Gang Diamond Hand Apes. That's freaking dope. I dig these. Yes, sir. So that's pretty sick. I appreciate that, my friend. Thank you. And this one came in from Ron. So I appreciate you, Ron, as well. If I can open this goddamn package. I'm so bad at this. Honestly, I need a pair of gorilla arms. Holy, I need to learn how to edit so you guys can't watch me struggle. Here we go. And this is coming in from Ron, and it is a book, Mornings with Ron, Inspiring Words to Start Your Day. And I'm definitely going to give this a read. And it's got a letter in there. I'm not going to read this right now aloud to you guys, but I appreciate that. He also wrote a note in the book. You guys are awesome, and I appreciate that a lot. And if you guys want to send anything, you can. If not, I'm chilling. But I did want to show you guys and give recognition to those who did, because I do appreciate you immensely. So that's what I've got for you guys. Hit the like button, subscribe if you'd like to. I put up videos like this every single day. I talk about stock market manipulation, corruption, AMC, all sorts of different stuff. That's what I've got. So catch you on the next one. Much love, light taps, and peace.